Good afternoon. This is Larry Tentarelli. I'm the editor and publisher of the Blue Chip Daily Trend Report, and I'm here with today's edition of your Daily 5 for StockCharts.com. So we'll get started. Just a brief introduction of who I am. You can find me on Twitter at LMT978 is my handle, and then my website is bluechipdaily.com. So we're going to get started with the core markets. We're going to start with the S&P 500. And what I wanted to do today is really focus on some big picture macro charts. So usually when I come on, we'll take a look at some stock ideas and some stock uptrends. But I think where we're at right now in the markets, I've got a much bigger focus on the big picture macro. And I think today going into the FOMC, which probably should be a historic FOMC, it's going to be their first 75 basis point rate hike since 1994. And also we're starting QT at the same time. So I don't think that's ever happened. I could be wrong, but we'll get started with the S&P. So this is the core market. And what I want to do here is I want to focus on the primary trend of the market. So the S&P right now, we can see it's in a downtrend for my time frame. So a couple things that are that show up on the chart: the 10-day moving average, the 10-week moving average, which is the equivalent to the 50-day, that's declining. The 40-week moving average, which is the equivalent to the 200-day, that's declining. And then we've got a bearish cross back in February. So all of this is negative price momentum for now. The weekly MACD on the chart, that's also declining. So that's negative momentum for now, but there is some positive. So it's not just all negative, although the primary trend right now is down. There's a couple factors that I'm taking a look at. So 365 on the chart, if we take a look right in this level, 365 in December, 365 in March. So 365 is the first level of support that I'd like to see hold. Now, the good news is there's some positioning. We can see that the S&P has been down mostly for the past 2.5 months. So there's a lot of oversold momentum right now. The S&P McClellan oscillator is at the second lowest level. I don't have it on the chart here, but it's at the second lowest level since the March 2020 lows. Also, hedge fund net long exposure, according to Bloomberg, is the lowest that it's been in 5 years. So what I see here on this chart for my time frame, this is a primary downtrend. So the trend is down, but there's a possibility based on what the FOMC says today. Markets tend to like clarity. So right now, the market doesn't know whatsoever. We think we're going to get 75 basis points. It's not sure, but we think that's what we're going to get. We think we're going to get 75 basis points next month, but the markets don't like uncertainty. They often sell off on uncertainty, as we can see here. And often after we get the news, whether it's good, bad, or indifferent, the markets can often rally. So the first thing that I want to see today is, does the S&P hold over 365? Do we get that oversold relief rally? And then if we do, the first level that I'm going to take a look at is 400 to 410. So 400 to 410 on the SPY chart. I'd like to see 365 hold. I wouldn't mind seeing a nice high volume oversold flush and reversal, but 365 on the low side, 400 to 410 on the high side is the first place that I want to take a look at. Triple Q are the first place that I want to see if that gets tested. So Triple Q, very similar to SPY, and obviously the mega cap techs are the largest component of the S&P 500. So same weekly chart, weekly downtrend with the moving averages, weekly MACD lower. So the first level that I want to take a look at here is 265 to 270 on the downside. And then if we get any type, if it holds above that and we get any type of selling flush or reversal, then really the first place that I would take a look at the chart is 305, which is the declining 10-week moving average. And then 315 has really been overhead resistance. So 317, we'll call it 315, was a key level here. NASDAQ 100 rallied right into 315. It failed there, couldn't get above it. It's failed below the declining 10 weeks. So the first thing I'd like to see, obviously, for the downside support levels to hold, number one, then I'd really like to see if it can get back over this 10-week moving average. That hasn't happened since April. That could possibly give us a sign that maybe a shorter term low is in. But I have to say for right now that for my time frame, this is a downtrend. So any reversal, I would treat that the same way that I've treated it for the last few months, which it would be an oversold technical reversal into a downtrend. So I really want to see some improvement. So I've got triple Q on watch for a potential long side trade, maybe for a shorter time period, but we'll see how that develops over the next day or two. So the VIX, and the VIX is very important, obviously, because a lot of the volatility in the market shows up here. So what I'd like to see, and we don't always get what we'd like to see, but there's a couple things that are on my radar screen. So obviously, we looked at the S&P and where it is on the charts. We spoke about the McClellan oscillator. So the VIX, we haven't really seen that full VIX spike and reversal as of yet. So generally what I look for, over 40, so 38 to 40 is where I want to focus on here. So if for some reason, if we do see some type of volatility after the FOMC, and if there's any type of a spike, the higher it goes closer to 38 or 40 would tell me that we're closer to probably some type of at least a near-term bottom, and that could lead to a sharp counter trend reversal. So if we take a look since the March 2020 lows, obviously VIX went way through the top end of the chart, but since then 44, 38, 41, and then we can see it hasn't made it over 38 except for one time. So if we start to get into that 38 to 40 range or higher, that would tell me to be on the lookout for a sharp counter trend reversal. Now, here's the key thing. As I said, we don't always get what we're looking for. We could get the FOMC decision and VIX might stay right where it is and not move higher, and we might not get that spike. So it's not a prediction on my part that it has to happen, but if we do see that high VIX spike, that would make me feel more confident about possibly a sharp counter trend reversal. Chart number 4, bond yields. So this is very important, as we know. So bond yields are breaking out. They do that with high inflation. So 320, if we take a look on the chart, here was 324, but 320 to 325, that's a breakout level that goes back to 2011. So this is an 11-year breakout level. What I would like to see, I would like to see this breakout not follow through. So if this breakout follows through, this move in bond yields has been a byproduct of higher inflation. Higher inflation's put a lot of pressure on the market. It's put a lot of pressure on bonds. So what I'd like to see is I'd like to see this move not follow through, because if it does follow through, then that would tell me to expect more pressure on bonds, expect more pressure on stocks. Now, I'm a trend follower and I'm a breakout trader. So what that means is that when I see moves like this, I treat that as a bullish move. So to me, this is a bullish breakout in bond yields, but I'd rather see it not follow through. But if it does, I would expect bonds to stay under pressure, especially TLT, and this is a core market to watch. And I expect some volatility in here after the Fed today. And then the last chart, and this is another bullish chart, and bullish when I say bond yields were bullish, but breaking out, but I'd rather see that come down. But commodities tend to do very well in periods of high inflation, and that's what we're seeing right now. And it's no coincidence that bond yields are breaking out and commodities are breaking out, because they both tend to do well in inflationary periods. So DBC is the Invesco Commodity Index Tracking Fund. Off the top of my head, this is about 50% in energy. So crude oil, WTI, Brent, It's got gasoline, natural gas. So this is about 50% energy. It has some precious metals. It has some agriculture, the salts and what have you. So this is a breakout right now. And we can see where it is on the chart, 29.73. This is clearing a level much like bond yields. This is clearing a level that goes back to 2011 and 2012. So I'm very long, or it's my biggest long position in the energy sector right now. It does tend to do well with inflation. So what I'm looking for after today is, does this commodity move continue? Is there a sharp rotation out of it? And I expect that what happens with bond yields could also happen with the commodities. But as long as the inflation trade stays in focus, then I think that commodities should continue to work. So as I said, I'm long in the energy sector, and this is the top ranked chart on my screen, but anything can happen after the FOMC, which can be very volatile. So the key thing that I want to look for, do we get a follow through in bond yields, and do we get a follow through in commodities? So that's it for today's Your Daily 5 with my 5 focus charts. I hope that you enjoyed the video, and I hope that everyone has a great day. Thank you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.